Hey Ray, good to talk with you again today. Talk about those things that we need to talk to you about on Financial Moments, where we talk to people out there about how to manage their investments and also their insurance portfolios,
Yes.
so they can make sure that they're completely covered. So let's talk about portfolio reviews today.
Okay.
So on a portfolio review, what do you do exactly with a customer or a client who comes in?
Yeah, we sit down and I ask them to bring in their policies because it's hard to do a review without a policy. So we ask them to get all your policies together, or get all your, if it's financial, get your life insurance together, your long-term care policy, your disability income policy, your mutual fund statement, your variable annuity statement, the latest statements you have, or if you have an investment grade life policy, the last statement, so we can see just what kind of return you're getting. And if it's just a traditional life policy, then just bring it so that we can confirm that you have either a permanent policy or you have a term policy. And if you think it's a term policy, well, maybe instead of 10 years, it might be 20 years. I discovered that recently for a client, which was a huge relief to him. So basically, a portfolio review is like when you take your car in for a checkup, you tell everybody, hey, check everything, check all the fluids, look under there, make sure my ball joints are good, the struts are good, shocks are good, check all the air in the tire. Basically, let's look at everything.
Yeah, so it's like an annual tune-up for
There you
everything,
go.
right?
Yep.
And and it's interesting is that you mentioned a lot of different instruments there in insurance and investment.
Yes.
A lot of people don't realize that you basically do custom programs for people, because not everybody's needs are the same.
No.
And it depends on where you are in your life as well, correct?
That's right.
So one of the things you can do in that portfolio review is maybe point to them, now it's time to do this. Or you need to extend that.
Yes.
And doing those type of things. So can you talk a little bit more about that?
Yeah, and that made me stop and think about one thing, because a lot of people out here still work for companies that provide benefits. Having been here with the area growing and starting in financial services, I actually help people or companies, startups out here 35 years ago to put together their benefits package. So I encourage people that have a benefits package, bring your benefits package, because there may be some benefits that you can purchase there that will be a benefit to you now. And maybe you won't always need them, but if you don't know what's available to you, how will you know to take advantage of it?
Right, and isn't it true that some of those benefits can transfer
That's right.
after you leave employment?
Exactly, and that's where that may come in, into play, and it's very important, because I've helped a lot of people transition that way, because as you just said, they didn't even know.
And the other thing too is today we're experiencing something that we haven't seen in the last 30 years, something called inflation.
Yes.
And unless you've been hiding under a rock someplace, you're noticing that homes around you are selling for a lot more money than what they used to. But not only that, the replacement cost for that house if something happens. And just look what's happened to us in the Houston market just in the last 2 years, 3 years. Major floods. We've got tornadoes last weekend.
Yes.
We've got freezes last winter.
Yes.
Talk to you about another reason why an annual portfolio review is critical.
Well, for the reasons you just mentioned, to make sure that you're going to have adequate coverage for whatever comes your way, because that's all we do. I mean, insurance is not complicated. All the insurance does is transfer the risk from you to the insurance company. That's all it is. Real plain, real simple. And so when you do the transfer, you want to make sure that you transfer as much of the risk as possible. Like we mentioned, the freeze. My son was just telling me this week that he follows a European model of the weather, and they're saying that we're going to have a freeze about the same or worse than the one we had last year at this time. And that's going to happen in the next 3 to 4 weeks. So if the folks are going to do a portfolio review, they better do it quick.
Quick. We'll hear those pops of
Yeah.
piping and those
Yeah.
drips of dripping.
Yeah, make sure, man. I know we've sent out a little informational video what to do to prepare for that. But those things that even if you prepare, sometimes things just happen. And this is where it's important to do your portfolio review. Review everything that you have so that you make sure that coverage is there. Because the last thing any agent, well, any reputable agent that I know wants to say is, hey man, I'm sorry, that's not covered.
Well, you mentioned something to me the other day as well, is that, because of the ease of buying insurance online these days, you're basically out there without any guidance to what to buy and what you need to buy. So, I mean, this is really the value of dealing with a local agent, someone who understands the market and understands what your needs are, which is even important coming in and doing business with a local agent versus doing it online. Because you really need to have somebody who help you as a professional evaluate what your needs are. Is that correct?
Yeah, that's correct. Because not everybody is in the same, physical or financial position. Because there were some individuals that can buy a $500,000 home, but let's just make it more real. Let's call it a $250,000 home, and they need to have a $2,500 deductible, 1%, because anything more than that initially is going to potentially financially strap them or put them in a position they can't be. Whereas there are other people that could easily go with a 5% deductible. Okay, so now we're talking $7,500. However, they have that $7,500 set aside for emergency purposes, which is part of the financial planning that I recommend, is you have to have some money set aside for emergencies.
So that's why investments and insurance really tie together.
Exactly. You have to do the whole portfolio, the whole picture. Not everything is tied. It's all